So it shouldn't come as much of a surprise to you that most Americans have absolutely no idea what they're doing when it comes to taxes. And like with a system this complicated, can you honestly blame them? Now, one of the places where most people get absolutely just like mind-boggled by taxes is by what are called tax brackets. And so in this video, I'm gonna break these down as simply as possible. We've got some props here, we've got some money, and I'm gonna show you exactly how tax brackets work in a super easy to understand way, because they're honestly not that complicated, but they're super misunderstood. There's two huge misconceptions that most people watching this video probably have. And so we're gonna bust those misconceptions, show you exactly how they work, because if you can understand how tax brackets work and this kind of fundamental element of taxes, you're really gonna be able to understand like the whole big picture, okay, and actually figure out exactly how much you're going to owe in taxes, because like this is the central concept that determines exactly what you're going to owe the federal government at the end of the year or at the end of the quarter if you are self-employed. So let's dive right on into it and start off with what the heck tax brackets even are. Now, a 2019 study from GoBankingRates.com actually found that 90% of people didn't even know how many tax brackets there were. Not just like how tax brackets work, but they didn't even know how many there were. So as you can see right here, we've got 7 different tax brackets. That is the answer to the question, but let's dive into how the system actually functions. Now, you've likely heard the term before, and basically tax brackets determine what percentage of your income you're going to be paying in taxes. Pretty straightforward. Each tax bracket has an associated percentage, and that percentage is the amount that you're going to be charged in taxes. Now, depending on how much taxable income you make during the year, that's going to determine which tax bracket you actually fall into. Now, in order to determine how much taxable income you actually have, there's a whole formula that goes through that. We break that down step by step in my video where I go over income taxes for self-employed people, exactly how those work. So make sure you check that video out up here to actually figure out what your taxable income is. Once you've got that, then you can actually go to the tax brackets and put that money into your bracket. Now, as you can see, for 2021, the tax brackets range from 10% all the way up to 37%. And so your income is going to fall into one of these buckets. I also want to mention here that these tax brackets only apply to your federal income taxes. So as a self-employed person, you've also got self-employment taxes. That is completely different from your tax bracket. Also, you might have something called state income taxes, depending on which state you live in. That's also going to be totally separate from what we're talking about right now. And you can see these go from 10 to 37, but when you add in those other taxes, your self-employment and your state income taxes, you could potentially be paying upwards of 60% in taxes when all is said and done. So I hope you're still with me so far. Nothing too complicated up to this point. You've got your different buckets. They are different sizes as well. As you can see, these ones can fit less money in them. These ones can fit more money in them. So that's another thing that we're going to have to talk about. But you've got your different buckets, your different percentages, your different sizes. Now let's talk about how the process of actually putting your money into these buckets works, because that's where we lose a lot of people. So a statement that I believe most Americans would probably think is true is that all of your income is taxed at the rate determined by your tax bracket. And there are two things that are wrong with that statement. The first of which is that it's not actually your income that is being taxed. As a self-employed person, as a creator, it is your profits that are being taxed. Okay, so you have your income, you take away your deductions, that gives you your profits, and that is what's actually being put into these buckets. Again, check out that video where I dive deep into income taxes for self-employed people. That's gonna give you the full scoop on that, but just know you're paying taxes based on your profits, not your income, okay? Because you could make, say, 200 grand in a year as a YouTuber and only pay taxes on 80 grand because you had $120,000. You came up with $120,000 of deductions that you were able to reduce your income by, okay? So there's a whole game to this. I have a whole video on the top 10 deductions for creators as well, which you can find up here, but that's gonna really show you how you can start to reduce your taxable income, because that's really the name of the game here, is reducing your taxable income so you pay less in taxes. Because again, like I said, you can make 200 grand, but if you can come up with tens of thousands of dollars in additional deductions, that's gonna save you some serious money when it comes to actually looking at your tax brackets. So that's the first thing that's wrong with the statement. The second thing that was wrong with that initial statement is that your tax bracket is not evenly applied to all of your income. Actually, if you look at your income, different sections of your income are going to be taxed at different rates. And if that sounds confusing, it's not. Okay, we're gonna dive into that right now. That's what these buckets here are for, to show you exactly how that process works. All right, so let's dive into an example here and say that we made $200,000 on YouTube this year. Here is our $200,000. Let's say we were able to take $115,000 in deductions, okay? So off the top, we're taking about $115,000, boom, deducted. We are not paying taxes on that money. That was a deduction. Now at this point, we've got $85,000 left. This is our taxable income, and now we are going to use this to determine how much tax we're actually going to owe to the federal government by using our handy dandy tax brackets right here. And so the process is actually really easy, okay? Because all you're going to do is you're going to take your taxable income, okay, your profits right here, and you're going to start filling up these Tupperware containers until you run out of money, okay? Once you run out of money, then you can super easily calculate how much you owe in taxes. And so, like I said, each of these Tupperware containers has a fixed amount of money that can fit inside of it, okay? And once that Tupperware container is full, then you move on to the next one, okay? So let's just start doing this. I'll show you what I mean. So this is our first container. This is a 10% tax bracket, okay? This can hold roughly $10,000. So we're gonna take $10,000 of our $85,000 and put it, boom, right there in the 10% tax bracket. Now that bucket is full and we can move on to the 12% bucket. This one can hold approximately $30,000. So it's about 3 times as large as the initial bucket. So we're taking about 30 grand of our $85,000, plopping it right here in the 12% bracket. Now we're moving on to the 22% bracket. This one can fit about $45,000. So we're gonna take our last 45 grand, plop it right in this bucket, and that one is now full. So boom, we're out of money. We have landed in the 22% tax bracket, which means we are in the 22% tax bracket. If someone asks you what tax bracket you're in, you would say, I'm in the 22% tax bracket. And although we made $200,000 on YouTube this year in this example, I am only in the 22% tax bracket because I'm only paying taxes on $85,000 of my income because I had $115,000 in deduction. So hopefully you can see how that works. If we would have paid taxes on this whole 200 grand, we would have kept going, went up to 24, went up to 32, went up to 35, okay, and we would have kept using that money until we ran out. But since we have those deductions here, we do not have to pay taxes on this income, which is pretty sweet. So now we've got the money in the buckets. How do we figure out how much it's taxed at? Well, it's super duper easy, okay? You just look at the percentage on the front of the bucket, you multiply that by how much money is in the bucket, and boom, you get your tax liability, okay? So let's do that, okay? Our first bucket, like we said, the 10% bucket could fit about 10 grand. So we've got 10 grand in here, we multiply that by 10%, and that's $1,000 in taxes. So boom, we're gonna take 1,000 of our dollars, and that's the taxes that we owe for the money that was in this initial bucket. Boom, so we're taking our taxes, we're gonna put them right over here. Now we've got our 12% bucket that's got $30,000 in it, okay? So we're gonna pay 12% taxes on these, which if my math checks out, I think that's about $3,600. So we're gonna take $3,600 out of here, and that's what we're paying to the federal government, boom. Next, move on to the 22% bracket. This is where we left off. This is our last bucket. So we're gonna take 22% of the $45,000 that is in that bucket. Had to do some math here, but it checks out to about $9,900. So we're gonna take $9,900 out of here. We're gonna plop it into our tax pile. And now this is our pile of money that we owe the tax man at the end of the year. If you add that all up, you're getting $14,500 that we owe in taxes on our $85,000 of taxable income. Now, if you do the math on that, that works out to about a 17% of your income going towards taxes, 17% of your 85 grand taxable income going towards taxes. And as you can see, you're not paying 22% in taxes on your taxable income because only part of it is being taxed at 22%. Part of it's being taxed at 12, part of it's being taxed at 10. So altogether on average, you're paying about 17% in taxes. So depending on what tax bracket you're in, that does not determine what percentage of your income goes to taxes. That only determines what percentage of the top slice of your income goes to taxes. Okay, I hope this makes sense. I hope you're following along so far. And then if you do the math on how much tax we're actually paying on our entire $200,000 that we made for the year, that's only about 7%, okay? Because we're in the 22% bracket, we paid a little over 14 grand in taxes on $200,000 of initial income for the year. That's only 7% of our total income that's going to taxes. But again, about 17% of our actual taxable income that's going towards taxes. And if you're getting caught up in that vocabulary, again, check out the video that I made on income taxes for self-employed people. It's gonna define those terms, help you really get a solid understanding of how those work. So now a couple more misconceptions that people have when it comes to tax brackets, okay? The first one is when someone asks you what tax bracket you're in, we talked about that a little bit earlier, but the tax bracket that you were quote unquote in is the last one that you end off on. So if we had kept putting in more money until we made it to the 35% bucket or the 35% bucket, then we would be in the 35% tax bracket. It's just whatever bucket you end in, your last dollar goes into, that is the tax bracket that you are so-called in. Now, let's talk about what happens here if we were to make a little bit more money, okay? Because we just perfectly filled that 22% bucket right to the top, okay? It had $45,000 worth of room, we filled it with 45 grand, and boom, we finished right there, nice and clean. But what if we made an extra $100, okay? What if we made $100 more? That would go in the 24% bucket, okay? So now we are in the 24% tax bracket, but that does not mean that we now pay a ridiculous amount more in taxes. All that means is that this additional $100 is taxed at 24%. So we're only gonna owe $24 more in tax, but we have bumped up an entire tax bracket, okay? So some people, they'll be freaking out if they're gonna make more money this year because they think, oh my gosh, I'm gonna go into a higher tax bracket, that's gonna suck, I'm gonna have to owe so much more in taxes. That's not the case, okay? Because when you move up a tax bracket, you're only paying that additional percentage on the money that you're making above what you were making before. So we go from making $85,000 to $85,100. We are now in the 24% bucket, but we're only paying that 24% on this $100 bill right here, not on all the rest of the stuff, because this is already in its buckets. There's no change here. The only change is in the additional money that we're adding. So there is no chance that a raise or making more money could negatively impact you more than it will positively impact you. Okay, there's no possible way that you making more money could have a net negative effect on your take-home income. Okay, that's just not how the tax system works. It's only affecting the additional money that you make. And so just to reinforce all that, okay, you as a YouTuber or whatever you do, you have the same 10% bucket as Jeff Bezos has, okay? You guys are paying the same 10% on your first 10 grand. Everybody has these same buckets, okay? It just depends on which bucket you end off in, okay? Like with Jeff Bezos, he's got all these buckets filled, and then he's just got a bunch of money in that 37% bucket, okay? He's got a ton of money in that 37% bucket. But for the rest of us, we have the same size buckets. It's all just a matter of which bucket you end off in and where your last dollar ends. So to wrap this all up and kind of put a bow on it, there are two takeaways that I want you to get out of this video, okay? Really only two things. If you get these two things, you're gonna know more about the US tax system than literally 90% of people out there, okay? And the two things are, one, you are taxed on your profits, not on your income, okay? So it goes income minus your deductions, gets you your taxable income, and that is basically your profits, and that's what's going to go into these various buckets here, okay? Like I said, we made 200 grand, but we had 115 grand of deductions, so we only paid taxes on $85,000. That's pretty self-explanatory. The second thing is that not all of your income is taxed at the same rate, okay? Because like I said, we landed in the 22% bracket, but we paid an average of 17% taxes because some of our income was taxed at 22, some at 12, some at 10, and if we bump up another bracket here, only that additional income is taxed at that higher bracket. It does not apply to all this other income over here that is already accounted for and already in its buckets. So if you've got those two things, you now know more than the vast majority of America when it comes to taxes. So congratulations, that is a big accomplishment. Although the bar might be a little bit low on that, it is still an accomplishment nonetheless. Now, the next thing you should do is click the subscribe button down below and check out this video over here that I've been mentioning throughout this video, where I dive deep into income taxes for self-employed people, exactly everything you need to know, the exact formula that you use in addition to all the taxes you're gonna be paying and all of that good stuff. So make sure you check that video out. It's gonna provide you with so much information on taxes, your mind is gonna explode. So check out that video and I'll see you over there.